Hello, everyone. Thank you for joining us again today for our mortgage webinar seminar. I have another great guest joining me, one of TVFCU's very own mortgage originators, Janet Sherman. Hey, Janet, how are you this morning?
Hi. Oh, I'm great. Thank you. Thanks
Good
for
to see
having
you.
me.
Good to see you. Good to see you on this lovely fall morning. So we're going to be
Yes.
talking about some. This kind of be a quick one. We're going to be delving in just real quick about TVFCU products and different rates and scenarios and different products that we have and a little bit of terminology. We're going to run kind of fast on this one. We want to keep it short, sweet, and to the point, and give you some really good information because a lot is being talked about today about mortgage rates. Now, Janet,
Mhm.
we're all seeing rates have gone up. They're definitely higher than
Yes.
they were 6 to 12 months ago, and
Yeah.
see what alternatives there are. And also, we're going to talk about TVFC, what we have to offer, because I think, and I know Janet agrees with me, what we offer is going to say is the best in town when it comes to purchasing a home. Or if you
Mhm.
want to refinance, we still have some good rates to offer. So we're going to delve into that real quick in just a second. Again, let me introduce myself. My name is Bryan Fryar. I'm the mortgage sales manager here at TVFCU. Chattanooga native, lived here all my life, actually from Ottawa. So glad to be here with everyone. Janet, introduce yourself a little bit and tell us a little bit about yourself.
Yeah, I'm Janet Sherman. I've been with the credit union for almost 15 years. I'm from Upper East Tennessee. I'm a hillbilly from Upper East Tennessee. But I love living here in Chattanooga. I've been here for many, many years. And so I'm just very excited to be here.
Awesome. Would love having you here. Janet is one of my employees. Since I'm a sales manager, she is a mortgage originator. So she and I work closely together constantly. Janet is one of the top originators in Chattanooga area. She's won accolades and awards. So Janet comes to us with a wealth of knowledge. She's going to share some of that knowledge, and we're going to get right to it since we're going to keep this one kind of short today. But again, packed with tons of information. So
Yeah.
rates. Rates have been going up. Everybody knows it. I think I saw in the news, I think it was 2 weeks ago, we had reached, the mortgage industry had reached rates that had not been seen since 2002. So it's been about 20 years. Rates have been up. I know I've been in the business about 25 years. Janet, you've been in the business quite a few years yourself. So
Mhm.
we have seen those higher rates, but a lot of our younger viewers may not be used to that. We've been kind of spoiled here the past 12, 14 years with low rates, and especially the past 2 or 3 years since COVID hit, we've had record low rates. So, how is that impacting buyers and sellers? Janet, what are you seeing? What comes with those high rates rather than just high payments? What are people running into in this market?
Mhm. Well, there was a housing shortage
Mhm.
there for a while, but the housing market is opening up some. Uh, Housing prices are becoming a little more realistic. They were overinflated. Um, and now, with the higher rates, we are cautious to make sure that you are comfortable with that payment.
Mhm.
Because we're all in this together. Everything is higher.
Mhm.
But we look closely to make sure you're comfortable and look at all your options to get a payment that you're comfortable with.
Yeah, yeah, and that's something we're seeing is that with the higher rates and the higher prices on homes, people not being able to qualify, and the
Mhm.
with the higher rates, it's kind of cooled down the housing market a little bit. The prices aren't going up; they're actually stabilizing. So it's going to be a better time to buy. However, the rates being high, that's kind of put some buyers to the sideline, especially first time home buyers. So what I'm going to talk
Yeah.
about first is TVFCU. We do portfolio loans. We also do secondary market, selling loans to an investor. But with our portfolio loans, that gives us a lot of leeway in what we can offer. We can offer lower rates than a lot of the competition locally and nationally. Speaking of which, we do loans in our 13 or 17 county region, North Georgia, Southeast Tennessee. Janet, you've done some loans, not just Tennessee, Georgia, Alabama,
Mhm.
Florida. I think North
Mhm.
Carolina,
North
Pennsylvania.
Carolina, Pennsylvania.
Yeah,
Mhm.
yeah. So we can loan outside of our basic area of Tennessee,
Mhm.
Alabama, Georgia, and Florida. So that being
Yep.
said, portfolio products. What are those? Those are loans that we keep in house. We do not sell them to an investor, so it gives us a little bit of leeway in what we can do in our loans. Right now, Janet, if you'll tell everybody what our biggest, hottest product is right now, if somebody's wanting to go buy a house, what are you
Mhm.
seeing right now, and what are people opting for?
hmm We are doing more of our 7-1 and 10-1 ARM portfolio loans.
Mm-hmm.
The advantage of those, one, it's a lower rate.
Mm-hmm.
Especially on a first-time home buyer, we see there's a trend that most people may not even keep that house for 7 or 10 years.
Mm-hmm.
Um, and it helps you get into the house now with a lower payment,
Mm-hmm.
fixed for either 7 or 10 years,
Mm-hmm.
that there's no PMI, and I think we're going into that.
Yep.
So it's a way to get into the house with a more reasonable payment
Mm-hmm.
with the expectation of possibly refinancing down the road if rates
Mm-hmm.
drop, or you may not even keep that house or whatever, but you've got plenty of time to work on that later
Yeah.
down
Right.
the road.
Yeah, yeah,
hmm
and Janet was saying we call it our 7-1 arm or our 10-1 arm. These are loans that are amortized to a 30-year term. They can be amortized to a 20, 25, or 15, but they are a fixed rate for the first 7 years or fixed rate for the first 10 years. They have no prepayment penalty. The introductory rate is low. It has no monthly PMI. So everybody knows what PMI is. That is private mortgage insurance. If you don't put 20% down with your standard Fannie Mae, Freddie Mac, FHA loan, you do have to pay that extra monthly PMI in addition to your homeowner's insurance and property taxes. So it is, and Jan's going to run over some numbers and kind of give you an idea of what you're looking at. But before we get to that, everybody, when they're, people in the past, especially first-time homebuyers, always looking for a 30-year fixed rate. 30-year fixed rate. That's kind of the benchmark in the mortgage industry, a 30-year, 20-year, or 15, but mainly 30-year because your payment is lower. However, the longer term that you do, your interest rate is going to be a little bit higher. So a 15-year rate is going to be lower than a 30-year. And Janet, what are we seeing today on a 30-year fixed? We're seeing in the market.
Um, yeah, you're looking at approximately 6.875%
Yep.
fixed on a 30-year.
Yep. Yep. And then on
hmm
top of that, if you don't put 20% down, you also have to pay monthly PMI. So
hmm
I think you ran a scenario for me on a 30-year
hmm
fixed based on that interest rate. What would the
hmm
payment and along with the PMI be?
Right. Well, I looked at a $250,000 purchase,
Mm-hmm.
30 years with the required 5% down. There
Mm-hmm.
is a 5% down required down payment,
Mm-hmm.
um, with estimated escrow of property taxes, homeowners insurance, and PMI. All
Mm-hmm.
that's lumped into your payment.
Mm-hmm.
You're looking at a payment of almost $1,900 a month.
1900 a month. So that's
That's total,
principal and
everything.
interest, that's your principal and interest payment. That does not change,
hmm
doesn't go up or down. Property taxes, homeowners insurance, which can change, by the way. If your taxes go
hmm
up, insurance goes up during the life of the loan, that can change your payment. And then the
hmm
PMI is stuck on that. So that's
hmm
$1,900. So, and that
hmm
was at 6.875% fixed rate.
6.875.
Okay.
That's right.
So if I wanted to do the lowest payment possible at TVFCU, I want to do
hmm
a 7-1 arm, which I think is going to be a
Uh-huh.
lowest rate, on a 30-year amortization. What is that payment with principal and interest, taxes, and insurance estimated? Of course, it has
hmm
no PMI. What would you say on that payment and the interest rate?
About $1,600. And that interest rate is 5.44.
5.44. Okay. So
Mm-hmm.
5.44% as opposed to the 6.875. Now,
Right.
the advantage of that, of course, is $400 less. That $400 less is principal and interest. That's less because
Mm-hmm.
your interest rate's
Mm-hmm.
lower. Also, you don't
Mm-hmm.
have the monthly PMI. Do you have the estimated
Mm-hmm.
PMI figure? Did you have that calculated for
It
us?
was about $75 a month.
$75 a month. So that
Yeah,
adds
and
up.
you get nothing for that.
Yeah, yeah. That protects the lender. And again, that's a secondary market rule. Fannie Mae, Freddie Mac, FHA, they're going to require that if you only put 5% down. Tell me another good thing about our portfolio loans. I know I talk about this all the time. Say
Yeah.
I can put 5% down if I want to, but what if I didn't want to?
Well, we're finding more and more people, especially new homeowners, are, if they can qualify, going 100%
Yeah,
and saving their cash
yeah, yeah.
instead of paying that down payment. Because what I tell my members is, you know, when you get in that new house, if this is your first home, you're going to need stuff.
Yeah.
You're going to need a lawnmower. You're going to
Mhm,
need this and that. So if you can, if all the numbers work, save that down payment.
mhm,
You can always pay extra on principal
Hmm.
during the life of the loan because there's no prepayment penalty and you can
Hmm.
always just lower your principal owed as well. So most people are, if they go with that product, they're going 100%
Yeah, yeah. That's
financing,
usually
no
what I
down
find.
payment.
Now they can put 5% down, 10% down if they want
Sure.
to lower that payment
Mhm.
even more if they have the
Mhm.
cash, the money on hand, or if they're getting a
Mhm.
gift from their parents,
Yep.
or something like that. So that's something to think about. If they want to do that, they can. We just offer it. It's something we offer 100%, no money down. Seller can pay closing costs on that too. If you're negotiating,
Mhm.
make sure you have a really good realtor that can work for you, and see if you can get some of those closing costs paid, because that's something we're starting to see now. Again, that the market's cooled
Mhm.
off. We are seeing sellers offering concessions to pay closing costs. I know you're seeing some now in some of the contracts you're
Yes.
receiving.
Yes, I am. I just got one yesterday. They're paying 100% of the closing cost.
Yeah, yeah. So
Yep.
that's something too. Those of you, if you're out there looking and wanting to get pre-qualified, definitely reach out to Janet, and we'll get her contact information there. It's something. It's a really good product. The 7-1 arm or the 10-1 arm. The 10-1 arm. Today's rate on that one, I think I saw it earlier today. 5.62%. So if you wanted a
Mhm.
30-year loan, but you want a longer fixed rate term, you could lock it in for 10 years at that rate, rather than doing the 30-year fix at 6.875 with PMI if you're not putting 20% down. So lots of alternatives here. Also, too, if I really wanted a fixed rate, but I wanted to do 100% financing, I didn't want to do an ARM. What other product do you have
Mhm.
that you could offer me? No PMI also. What do you have?
Mhm. We have a 24-year fixed rate in-house portfolio loan. I know at 24-year, and that always throws people. It's like 24. I've never heard of that. Well, it's a home. We call them our homegrown loans.
Hmm.
Um, I looked at same same house, $250,000, no down payment. So
Hmm.
this makes the loan even more. Principal and interest, no PMI, taxes and insurance. You're looking at about 1966 a month.
Okay.
Now, I compared the 30-year mortgage to that 24-year mortgage.
Hmm.
And on the 30-year mortgage, because you're stretching it out over 30 years,
Hmm.
even with the 5% down, it's going to cost you over the life of the loan about $77,000 more than on our 24-year loan.
And that's an
That's a
interest
lot of
period.
money.
Yeah, over 30
Yeah,
years,
that's accrued
$77,000
interest.
interest.
Mm-hmm.
And
Mm-hmm.
people ask, why is that? The payment's about the same. Well, you're
Right.
looking at 30 years as opposed to 24 years. Now, 24 years, you're 6 years less of interest that you're paying. So term, interest rate's important, but term is a big deal too.
Yeah.
So I always tell everybody, what's a loan I can take out where I can get my house pay as less interest as possible? Well, you want to try to do a 5, 10, or 15-year fixed if you can. But if you wanted to too, this is another option. Somebody wants a 15-year fixed, they could opt for the 10-1 arm, and we could amortize that for 15 years. So that's
Mm-hmm.
an option the borrower has too if they want a shorter term loan. Um,
Mm-hmm.
Now, tell everybody, these arms, everybody, gets kind of scared of those. They're like, well, what's going to happen? The rates start changing, and I go to
Mm-hmm.
that 7 years. But generally, historically, don't most people refinance or sell their home within 7 years?
Yes,
Yeah.
they do. They do.
And I want to kind of throw this out there too. There's in a lot of the advertising going on with some of our competitors right now. They're pushing a thing called 3-2-1 buy downs. That's where you can buy your interest rate down. What it does is it buys it down to a low rate for the first year. Then the rate goes up slightly the second year, and it goes up just slightly more on the first year. Then after that, it goes up to the full rate. It is a buy down for a temporary period. It is kind of expensive from what I'm seeing to buy those down. And looking at it compared to our arm is a fixed rate for 7 years. So much better
Mm-hmm.
option, I think, than the three, two,
Mm-hmm.
one buy downs you're seeing out there. Again, that's an option borrowers have. We actually do not have that here at TVFCU because we offer the arms with the much lower rate without the buy down, not having to pay all that money to buy it down. So that's a
Right.
great option. Great option.
Yeah.
Another thing too, we're gonna kind of discuss on this. Usually, when you're trying to buy a house or you want to refinance, what's the one thing you have to pay for?
Appraisal.
Pay an appraisal. What are you seeing on prices on appraisal these days?
550 up.
550 up. I'm seeing
Mm-hmm.
550 to 650. Most averaging somewhere on both ends of the spectrum is 550. That's a little bit on the cheaper side. So
It is.
TVFCU pays for your appraisal. So some lenders charge you up front, some charge you at the closing table. We're not going to charge you at all. So that's a
Mm-mm.
special we're running through this year and through 2023. That's additional savings that you're not having to
Yeah.
pay. So no PMI on these portfolio loans, no appraisal being paid or charged to you. We also pay for your credit report, which I think that's
Mm-hmm.
around $50 or so these days.
Mm-hmm.
So you're looking at a savings of anywhere from $600 to $700 just by going through TVFCU.
Absolutely.
Yeah, and it's a great deal. Another thing too, tell everybody about our underwriting and processing here at TVFCU.
Um, what I love about the credit union in our real estate department is we're a close-knit group. My my processor, I can speak with her at any time, and we can communicate directly with our underwriter.
Yeah,
And we work as a team. It's not like the underwriter is somewhere in some other state and don't have a clue of our area. Our underwriters live here, work here, as our processors do, so we're all familiar with the areas and what, typical appraisals we're going to come in at, and we look at the whole picture as well as a
yeah.
team.
Yeah, and it's
Mhm.
like Jan said, they're locally located. They're here. Actually, underwriters are next to my office. Janet talks to them every day. So we have local decisions made by a local company. That's what TVFCU is. We don't have board of directors that own us. We are owned by our members. We are a co-op. We are a credit union. So just let you know that our products are geared towards our membership and towards our area that we're located in. So if somebody needed to get a hold of an originator, Janet, how would they do that?
Well, you can contact me directly, and I think at the end of this seminar, my contact information will pop up.
Yep.
Um, or you can just go to our main website, Mortgage Loans, and you'll say Meet Our Team, and
Mhm.
all the originators are there, and you can apply with Janet or apply with Terry or whomever, and you just click on that, and that'll take you directly to the application, which is a very user-friendly application as
Yeah,
well.
it is. It's at tvfsu.com under the mortgages section. Go there and click on the Meet Our Team. You'll see Janet's picture there. You'll see all the other originators' picture. You'll see their contact information. You'll be able to apply with them directly. So if you find someone that you want to work with that's in your area, Janet's generally in the Hicks and Red Bank area, but Janet can do loans anywhere in our area or out of state. Do definitely apply with her. So we're gonna pull up our contact information here. Janet Sherman. You can reach her at this number and an email address, or reach us on our website. Janet, if you just want to run through that real quick.
The email janet.sherman@tvfcu.com, or on the main website, tvfcu.com/Janet Sherman. And that is my office number. There, the 634-3654.
That's a great way to get a hold of Janet. She can help you out. If you're a first time home buyer, or if this is your third or fourth house, Janet can help you out that, work you through the process, get you pre-qualified, and go over rates and terms, payments and everything. If you want to reach just the full mortgage department, our number 423-634-3667. You can reach out to us and get a hold of tvfcu.com, or at tvfcu.com, get a hold of the mortgage department. We're going to go ahead and finish up today. Everybody keep an eye on the comments below. You're going to see the and we'll talk to you next time. Thank you.
Okay, thank you.
Bye-bye.
Bye.